If you are alluding to potential dollar weakness coming, I don't think so. I think maybe the numbers were not as strong as expected, or rather the numbers were strong, but they were already baked into people's expectations. So that's why you saw the non-effect, or not a large effect. But at the end of the day, the U.S. dollar and the Fed is the dollar is the only currency that has a relatively stable tightening outlook, whereas the other central banks are still sort of experimenting with potential tightening targets, but not yet there. So I think the dollar is still, when in doubt, it'll still tend to be stronger.
And what are the implications for the dollar, the implications for yields as well, Mikio? Payrolls, we get that on Friday. What are you looking for in terms of the outright number? I know the devil is always in the details here. I think the most important metric is typically wage inflation. What's that going to tell us, and what are the implications going to be for Fed policy going forward?
Well, we don't have fixed expectations on any single set of weekly numbers. That's a bit too frequent for us. But going forward, unless we have a resolution of a credible resolution of the trade issues out there, I would actually expect the employment situation in the U.S. to deteriorate. We've already seen some companies. There are anecdotal evidence it's anecdotal evidence for now, but we've seen some U.S. companies scale back on U.S. factories and employment there because they have to face higher costs because of the steel and aluminum tariffs. So all things being equal and trade issues unresolved, I do expect a strong economy in the U.S. to lose momentum going forward.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.